Good afternoon, traders. Welcome to the More Analytics Afternoon Energy Podcast going into July 20th. I'm going to start off with the natural gas. Okay, the natural gas, we've been bearish overall from $8.20, 0.8. We've seen $6.68.6 so far to the downside. Uh, then on June 1st, we held exhaustion with a 339.60 high and rolled over 573 ticks. There's a number of other bearish calls in here as well. I warned that we are most likely in the last stretch of the move down from 440 250 with areas of possible exhaustion at 270 even and 250 210 and lower. And that if we settle back above 297.40 to 3 even 10, this will be a warning of a start to a bullish correction. If so, it should exceed 599 ticks from whatever the low is, right now being 282.30. Also, if we break above this line right here decently, that's going to warrant a decent strength. That's going to come in at 289.50 or 289.60, excuse me, plus 5 per hour starting at 6 o'clock p.m. Sunday. Since we settled above that, there's a high likelihood that we're probably going to violate it. A maintained gap higher would leave a medium bullish reversal below that would warrant a higher trade for days. And the crude oil, okay. The trade back above 67.91 had brought in 1336 going into the open on Friday. We traded up even higher up to 8207, and we also had additional levels to be bullish from the 7072 open when we left a minor bullish reversal below. On July 8th, we left a medium bullish reversal below, and then from the 7383 open have rallied up to 8207, and I'd warned it from the medium bullish reversal below that this would rally for days / weeks, and that was on 7/8, which was right here. And you can see we've rallied here for a week and a half so far. And then in the RBOB, actually let me just go back to the crude here for a second. Crude oil, if we fail back down below 79.78 minus 1.6 per hour starting at 6 o'clock p.m., that's going to warrant decent pressure. Excuse me one second. That's going to be T1. That's going to be 77.92 minus 1.6 per hour. That's going to warrant decent pressure. But we do have a higher line that comes in at 79.78. Minus 1 per hour starting at 6 o'clock p.m. Sunday. That'll warrant decent pressure. I would note also we may be in the last stretch of this move up from the lows with possible exhaustion at 82.49 to 52. And I said the 81.19 to 39 in the 82.42 to 52 areas of possible exhaustion, but I stopped short of suggesting leaning against them. We did hold the first one right here with 81.25 high and rolled over down to 79.82. We're approaching the next one above that, and the levels above there aren't up until 84.38 and 85.64. And in the RBOB, okay, the trade above 287.06 brought in strength up to 322.60, and I had additional areas to be long at the break above 295.75. I said on July 6th that we left a medium bullish reversal below that warrants a higher trade for days / weeks. And from July 6th, you can see we've rallied here for now 2 weeks. I also mentioned on the 13th that we left a minor bullish reversal below, warned about as well. And we rallied here for the past 5 days. A maintained gap lower would put bullishness on hold. Okay, and in the heating oil, Monday has a high likelihood of seeing range expansion. The trade above 320.04 has brought in strength up to 398.21. Bear with me just a moment. We've also held possible exhaustion above here, listed right here at 399.48. That's in the SEP contract. We've held that with a 399.18 high and rolled over slightly. I did not have that on the analysis in the morning, but I would be aware that that is a level. The next one above is at 405.77, and then we have 413.46. And in the heating oil, well, this is the SEP contract now, so we rolled into Augie. But more recently, the trade I'll skip that anyway. Maintain gap lower in there would put bullishness on hold. And then in the Brent, I warned that the 69.38 to 67.80 general area is a final area of exhaustion, and if we hold this, this could begin a new bull structure. It should be significant. We came just shy of that with a 70.14 low, and we have now rallied to 88.38. And I had multiple other levels to be long above in here. I did warn that we're possibly in the last stretch of the move up with possible exhaustion at 88.56 to 69, 89.97 to 90.64 and higher. We're just approaching the 88.69 level now. However, I would warn that we broke above this line right here, which warrants of continued strength. That came in at 78. Nope, that's higher. That came in at 86, 87 in the morning. Right here, or 88, but it broke above it at 87 at the time it broke above it. So this warns of continued strength, which means we may just blow through this first exhaustion level. I would be aware of this next level here because it's multiple levels together. That's going to come in at 89.97 to 90.64. We take that out, it's actually a sign of continued strength in general, but the next possible exhaustion is going to be up here at 94.08 to 94.39. Also, if we fail back down through this line decently, that's going to warrant a decent pressure, as we will have also taken out this apex up here at 87.55, but this line right here is going to come in at 86.86, and give me 1 second here. A decent penetration is going to be 152 ticks up until the Monday open. Well, the break above 896.59 has brought in strength up to 1193. I also said on June 30th, we left a medium bullish reversal below. That warrants a higher trade for days / weeks. And you can see from the that open here, we've rallied here for the past 3 weeks for 283.25 for the 909.75 open. and a number of other areas after that I wanted to get long as well. Monday has a good likelihood of seeing range expansion. A maintained gap lower will put bullishness on hold. And the cadence going into Monday is the RBOB is the strongest of the three, the heating oil the weakest of the three, and the crude oil in the middle is with relative strength to one another. Okay, thank you for watching, and I'll see you in the next podcast.